Well, the stock of the day is Lexmark. You know, the giant printer company located in Lexington, Kentucky, the heartland. Well, shares popped after a takeover proposal from a consortium of Chinese companies was approved. Now, this continues a long-term trend that has actually ballooned to record levels this year. You know, foreign companies buying American companies. In fact, as of May, foreign companies have spent $223 billion to take ownership of American companies. And it's not just large companies like Starwood or Lexmark. Even in small neighborhoods, nail salons, restaurants. I got to tell you a story. 2 years ago, I gave a speech in Mobile, Alabama, you know, to a lot of port operators all over the world. So I get to the airport, a black guy picks me up, a driver, and so we just started talking about the economy. That's what I like to do. And I said, so how's it going? He said, overall, it's pretty good. Then I asked him about the brothers, how they're doing. He said, you know, those who want to work, they're all working, they got jobs. And then I had to ask him about the food, right? Because let's face it, you can't go down south and not hit up a great barbecue spot or some soul food. Well, that's when I learned that Chinese investors have bought all the soul food joints in town, in Mobile, Alabama. So my driver looks at me in my face, and I got this kind of baffled, shocked look, a combination of both. Then he looks at me and says, and the food is good. So we both laughed. But the big question is America is for sale? And that really is no laughing matter. Joining me now to discuss, Randy Anderson and Brad Thomas. And by the way, author of the book, Trump Factor, right?
Absolutely.
Hey, let me start with the newbie, though. It's a little alarming. It's a little alarming that these companies, I remember a couple of years ago when Smithfield Foods, the Chinese bought them, and everybody was in an uproar. Then it faded away, and there's never uproars anymore.
Well, you know, it's a global economy, and these transactions are growing and growing and growing. The world's getting smaller. People aren't looking across the border any different than they're looking domestic. They're looking for the best risk-adjusted return. And today we're sitting there, and it's a perfect storm. Everybody wants growth. Well, if you're in Europe and you're a company trying to find growth, it's not there. Brexit's accelerated that problem. In Asia, you're starting to see growth. In Japan, you're seeing a stronger yen. You're already teetering on recession. So you're out there looking for opportunities. The U.S. looks attractive. While we're not growing fast, there's still strong economic growth, good risk-adjusted returns.
But even, guys, tonight, at midnight, we're going to hand over partial control of the Internet. I mean, God, okay, I know we're all business guys, and, you know, we understand trade, but do we draw a line somewhere along here?
You know, I think this economy really is not as competitive as it should be. And I think that's an indication with Lexmark today is that the U.S. really needs to be more competitive when it comes to technology today. When you see international companies that are acquiring U.S. companies, I did look at Lexmark, and that's a very competitive sector. You know, we're both in the property business, not in the printing business.
Sure.
But however, look at
it could be the hotels, it could be movie theaters. I mean, you name the industry, and China is coming in with all its new wealth. And they're converting it into quality wealth. You know, I call it suspicious wealth being converted into great wealth, because when you own these great companies, these great American companies, you've done, you know, you're good, you're golden.
You've done something great, but I think this transaction and the growth of transactions is largely driven by foreign capital looking to the U.S. And that's true whether it's farmers, whether it's tech, and whether it's real estate. The truth is, while we're getting so many deals where the U.S. is receiving dollars, you're going to see the second half of the year of the busted deals, when American investors are looking to Asia, or they're looking to Europe.
So in other words, you're saying this could be Japan all over again, and when they bought Rockefeller Center, don't panic, it's no big deal. I think it's a big deal. Now, you guys are in real estate. They've propped up the New York market and these other markets, the Chinese buyers. I mean, when we build 100-story buildings here with $100 million apartments, we know we're selling them to China, Saudi Arabia, and the like. I guess that's fine. But is there anywhere where you become just a little worried, Brad?
Really not. I mean, look, the U.S. is the gold standard in real estate today. And certain markets are frothy, New York, for example, but across the board, we look at all the property sectors in the U.S. I think we're in a very strong market. We're seeing rising earnings. We're seeing rising dividends. I think it's a great time to invest, and these international companies see that success.
I agree. You have strong fundamentals, so you're not seeing that much supply, so you're seeing growth in earnings. You're seeing very strong capital flows, and really to the point of this segment, a lot of U.S. investors were starting to make investments in Europe or starting funds in Asia, but today all those dollars that were earmarked for real estate, they're back in the U.S. because U.S. looks the best again.
It does look the best, but golly, do we have to sell everything? Although, he was right, that soul food was good. All right, guys, thanks a lot.